Today, I'm Chartered, your accounting tutor. In today's class, we are looking at correction of errors in bookkeeping and accounting under Introduction to Accounting. You recall, I told you that errors is one of the fundamental topics in accounting, and most learners find it difficult to correct errors when they are committed or when they occur. So we are going to see how these errors will be treated or will be corrected. Mind you, in the other class, I introduced all the errors not affecting the agreement or the trial balance, and I give full explanation to it. In today's class, we are going to see how these errors will be corrected using the journal proper. Mind you, the journal proper is one of the book of original entry used for correction of errors of one of its uses. Now, we are going to take the errors one after the another as I give full explanation of how the errors are being corrected. The number one error we are going to look at is error of principle. Error of what? Principles. Error of principle. Error of principle here simply means that it's an error which occurs a situation whereby the classes of account have been misused or the classes of account have been used wrongly. When the class of account have been used wrongly, then we say the error of principle have been committed. I explained that error of principle simply means that we have classes of account whereby accounts are broadly classified into personal and impersonal. And then if an impersonal account have been recorded into personal account or personal into impersonal, as the case may be, you have committed error of principle. Or even in the impersonal account, you change the real account to a nominal account, you still commit error of principle. So error of principle is committed basically when the classes of account have been used wrongly or have been interchanged. The error of principle have been committed. And let's see how error of principle is corrected using the journal proper. Let's look at an illustration quickly. Now here, we have on a given date, we have bought motor vehicle 500,000 cash, which was recorded to motor expenses account. Look at it, bought motor vehicle 500,000 cash, which was recorded to motor expenses account during the accounting period. It is an error. Why? Because motor vehicle here is a real account. Motor vehicle is a real account. Why? Motor expenses is a nominal account. It's a nominal account which expenses is also under nominal account. So if motor expenses, which is under the classification account called real account, is mistakenly recorded in motor expense account, which is a nominal account, then it becomes an error of what? Principle. Although motor vehicle relates to motor expenses, but motor vehicle purchase is a real account, while motor expenses is a nominal account under expenses account. So, if motor vehicle was purchased and mistakenly recorded in motor expense account, it becomes an error. And this error is detected at the end of the accounting period. Like in this case, at the end of 31st December 2025, an error like this has been discovered, though the trial balance. And as a matter of fact, we need to give explanation, we need to correct the error using the journal proper. So let's look at how the error will be corrected. On a good day, all these demonstration or all these proof here are not needed. When error is to be corrected, you go to the journal proper and correct the error. But the proof here is that if an error is corrected using the journal proper, there must be a proof, because most learners might not understand why motor vehicle is debited and motor expenses is credited in the journal proper. So, having the understanding of what happened in the ledger account, we now clarify why motor expenses is debited, why motor vehicle is debited, and then motor expenses is what? Credited. So, in this case, this is the proof. First, number one step in correcting the error is for you to expose the error. That is, give an exposure. Tell us what happened or demonstrate what happened. Then you now know that this is how the error should be corrected. Let's see how we expose the error and correct it, or show how it should be corrected when it is committed. First, you open the motor motor expenses account. Motor expenses account here, it means on the good day, as motor vehicle was purchased, it was recorded in motor expense account in the debit side. Mind you, in such error, the side which the account is to be recorded is normally maintained. We are saying that it was recorded wrongly. No. If motor vehicle was purchased, it's supposed to be debited. It's supposed to be debited in motor vehicle account and then credited in cash account. So here, motor expenses is also debited, which is supposed to be motor vehicle. And that is why it is also debited here, 500,000. Then, coming to motor vehicle account, nothing was there. Then it means it was motor expenses and then cash account, and then motor vehicle was completely outside or absent in the transaction that error was committed. So how do you do it? What you see here is the exposure of the transaction. That's actually this what happened. On that given day, motor expenses was debited wrongly with 500,000. So how do you correct the error? To correct the error here means to take this 500,000 out of motor expenses account. So in accounting, as I explained earlier, if you want to correct the error, it's not to come and claim or cancel the mistake that happened. No. In this case, you are going to post the same amount in the opposite side. Like here, 500,000 is found in the debit side of motor expense account. So by way of posting the same 500,000 in the credit side of motor expense account, it means this error, this posting will cancel itself by way of balancing. Because here, if you take 500,000 this side, and then if this account is being balanced, they now say 500,000 minus 500,000 by way of balancing, then zero value will be found in here. 500,000 no more be found in this very account. Then the error has been corrected. So for you to correct this error, if an amount is posted in the debit side and you want to remove it out of the account, it means you are going to post the same amount in the credit side, then the amount will be cancelled by way of balancing. This is the proof I'm trying to explain, the way of balancing. So coming to post motor vehicle in the credit side of motor expense account, it will now remove the 500,000 that was posted wrongly in motor expenses account. That's why I say motor vehicle 500 correction. Then here it means, look at the arrow. The arrow is showing that it's a removal. You are going to remove 500,000 that was posted wrongly in motor expenses by posting the credit side of the same amount, so that the 500,000 cancel the other amount here. Then indirectly this amount have been removed or corrected after motor expenses account. Then as you go to motor vehicle account, then it means that the amount that was removed here will be posted in the debit. Mind you, we're still talking about double entry here, because this is later. This is a credit posting, or this is a credit entry. Then if it's a credit entry, look at the particular going to motor vehicle account. As you remove it or correct it in the by posting the credit entry of it, then you come and post it in the debit. Look at the arrow showing you that if this value is removed, 500,000 after motor expense account to motor vehicle account, then the corresponding entry will now come to the debit side of the correct account, which is motor vehicle account. And that's what the arrow is showing you, that now motor vehicle that was not recorded, but recorded in motor vehicle is now recorded back with 500,000 as coming from motor expenses account. So in this day, it is clear that in correcting this error, motor expenses will be credited by way of removal, while motor vehicle account will be debited by way of putting the amount the way it's supposed to be. This is the exposure of the error. No examiner is asking you to demonstrate this, but I'm trying to demonstrate this because if you are teaching somebody or if you're trying to explain somebody why motor expenses is credited and why motor vehicle is debited in the journal, this now becomes the proof of why the transaction is posted in that way in the journal proper. So now let's come to the journal proper. This is where error is corrected. Mind you, I'm still repeating, the exposure there or everything there is just to show the proof of why motor vehicle is debited and motor expenses is credited using the journal proper. So coming here on the faithful day, no errors are corrected at the end of an accounting period. That is when all the transactions have been balanced balance and errors are detected, then they are detected and then enumerated out or written out. Then you pick them one after another and correct it, and then prepare the next adjusted tribunal to incorporate the errors. So here, motor expenses we confess, and mind you, there's a rule, a standing rule in journal proper, or a standing rule in recording transaction in the journal. What is the rule? The rule says that the debit entry or the debit account must be recorded first. I'm still repeating. The rule in the journal says that the account that is debited must be recorded first before the account that is credited. So in this case, if you look at my exposure of the error, motor vehicle was debited. Motor vehicle was debited. Therefore, motor vehicle will be recorded first. And then motor vehicle will be recorded first. So in this case, motor vehicle is debited with 500,000 as the proof here, while motor expenses will be credited with 500,000 as you can see the proof there being the removal from that account to make it zero. So in this case, after the crediting, then the next thing is for you to explain. In journal, you must narrate. You must explain very brief what happened. Otherwise, nobody will understand what happened. So you must tell us, or you must tell, you must put in the booklet that what happened in the journal was a correction or was an error committed which was corrected. Then here, you now put it clear by saying being, and you must start with the way being. You cannot just start the explanation. The standard way to do it is to start with the way being. They now say being to correct error of principle. If you know the name of the error, it's best to use the name of the error where precise the way it's supposed to be. But for instance, if you do not know the name, you can just make it clear by saying be to correct error of motor vehicle recorded in motor expenses account as short as clear. But if the error is well known and clear, it's best you put the name of the error straight forward. Then that is why in this case, we know very well that this type of error is error of principle. They go ahead and say, explain by saying, being to correct error of principle, and that ends the story. So in this case, you draw a line to close the transaction, giving way to another error to be recorded. This is how error of principle is being corrected in the journal proper. Mind you, I'm still saying error of principle is an error whereby an account is recorded in the wrong class of account. So for you to appreciate error of principle, you must know all the classes of account, which started with personal and impersonal account. Impersonal is divided into nominal and real in that order till down. Then if you know the classes, so as the classes are being exchanged, as in this case, you know that error of principle has been committed, then you correct it by way of removing it from the wrong account and taking it to the correct account in all cases. So let's go to the second error. The second error of under errors not affecting the agreement of the trial balance is error of commission. Error of commission. What do you mean by error of commission? Error of commission look a bit closer to error of principle. When we talk of error of commission here, we are not talking about exchange in the classes of account, but we are talking an error committed in the same class of account, the same class. We're talking about real. For example, if motor vehicle purchase was recorded in furniture account, it is error of commission because both motor vehicle and furniture are all real accounts. So if they are being exchanged by recording one real account into another by way of mistake or error, that becomes error of principle. Or we are in the personal account, for example, you bought goods from Mr. John, which was recorded in Mr. James or Jude account, but all their real account, they are in the same, they are in the same personal account. So if the personal account are being exchanged in the same class, then you say you are committing error of commission. So it is commission when the same class account have been exchanged in the same class of account. But when the class of account have been exchanged in different way, that is error of principle. Mind you, that is it. So let's take an illustration. On a good day, sold goods to Mr. James 4,000, which was recorded in Mr. Jude account. Mind you, Mr. James is a customer with a business, which you can call a debtor. Mr. Jude is also a customer. So both Mr. James and Jude are under what we call personal account. Personal account, which are account of individuals, organizations, or business. So if Mr. James' account has been mistakenly recorded in Mr. Jude's account, it becomes error of commission, as I was trying to explain earlier. So how do you correct the error? First, the best way for you to understand this is just see the proof. The proof is very important for learners to know why an account has been debited or created via the journal proper. So let's expose the error. This is Mr. Jude's account and this is Mr. James' account. But the whole error happened here. When goods was sold to Mr. James' account 4,000 and mistakenly recorded in Mr. Jude's account. But here, if you don't know double entry, you are still in trouble. Because you might not know where the error was posted and then the error was committed. You know that all sales are credited. If all sales are credited, then it means the next account will be debited. So in this case, if sales account was credited in this sales, which was the credit sales, then it means Mr. Jude's account will be debited. Mr. Jude's account will be debited. So look at the error. This is the exposure of error. It means goods that were sold to Mr. James were mistakenly recorded in Mr. Jude's account in the debit side. Look at the error here. This is what we call exposure of the error. You are trying to expose the error. This is what happened. So, just like I explained, if you want to correct this error, it is not by way of trying to cancel or paint or anything. It means you are going to post the corresponding this amount in the other side. By way of posting the other side, it means you try to remove or you remove the amount that was recorded wrongly. So, and that is why you come and credit this 4,000 in the other side to remove. By the time you record 4,000 here, it means by way of balancing 4,000 minus 4,000, 4,000 will not be found in this account again and it becomes zero, and that error has been corrected in that account. And that is why 4,000 has been credited to Mr. Jude's account and this becomes correction. The arrow here means a removal. You are removing by way of posting this 4,000. You are removing the other 4,000 that was posted wrongly in Mr. Jude's account. Now that you remove, you now take it to where it's supposed to be, which was also supposed to be in the debit side. That is Mr. James' account. So as you remove, look at to make it clear, you remove to take it to Mr. James' account, which is supposed to be the correct account initially. So you now come and debit it in Mr. James' account, which is supposed to be correct. Let's look at the error guiding that. The amount that was removed from the wrong account is now taken to the correct account, which is supposed to be Mr. James' account, debited, coming from Mr. Jude's account 4,000. Now, this is the proof. So coming to a journal proper, which is the basic or the required place to correct this error, then it means you see clear that Mr. James will be debited. And mind you, I'm still repeating that in correction of error, the account that is debited must be recorded first. And that is why James was debited, and that's why it's coming first with 4,000. While Mr. Jude was credited by way of removal. This is just, and this is exactly what happened. So the first step of correcting error is a removal. And that's why Mr. Jude's account is credited by way of removal. And that's why coming here, you see Mr. Jude's account is credited with 4,000, signifying that the amount was removed from Mr. James' account, then debited in removed from Mr. Jude's account, then debited in Mr. James' account. Then you must explain, you must narrate, and it must be very brief. So here you start with the word being. That's a being to correct error of commission. Being to correct error of commission. And then you rule and close it all. This is how error of principle and error of commission is corrected in accounting. Mind you, as I explained, most of these errors are not just easy to correct, as I'm trying to give the proof. That's the reason. If I can go straight and use a journal, most learners will be confused why an account is debited and why it's credited in the process of committing the error. So don't forget to share the video, comment if there's any question, if there's anything you're not clear, go in the comment section, give your comment, and then I will come back to address it. If there's any question, anything at all that is not clear, I'm still coming back to explain. But more of the errors is going to come. I'm going to explain, I'm going to give lectures, I'm going to teach all the errors that are found in accounting, both the one that affect the trial balance and the one that does not affect the trial balance. Follow up in my class and then always comment and share my video. I remain Chartered, your accounting tutor.